What's up, everybody? Michael Johnson here with Backstage Choreo Live, and I'm excited to be here with you guys today because we're going to talk about something that is super important and super needed in every business. And you're going to be surprised how many of you don't actually do this, and you need to. And it's one of those things that I know and I've seen over and over again that everybody avoids. Everybody puts it off and everybody kind of brushes it aside and they wait on it. Now, obviously, the larger you get, the more this is non negotiable. However, in the early stages, this is super important. So, as you may or may not know, I love systems. I love talking about systems. I love talking about systems for your brain. I like talking about systems for your business, especially for your business. And those systems become increasingly more important to have in place as you continue to grow and get bigger and bigger. Now, for many of you guys, there's a lot of chaos and there's a lot of overwhelm in business. And I totally understand it, but I want to tell you right now, it doesn't have to be that way. It doesn't have to be that way. You can totally reduce the overwhelm. You can totally reduce the stress. You could totally reduce the chaos. And all of that is clearly at the doorstep of systems. And that's why we talk about systems so often. We've been talking about the Essential 7 Systems Framework. That's the E7S framework. That is part of our overall business choreography systems framework. And we have now moved into the Meta 4 Systems Framework. And that is the 4 meta systems that you need in your business. And usually you start to need these 4, and they're the meta 4. Meta means about, overarching, all about. And usually you need these systems as you start to grow, as you start to implement team members, as you start to get people on board for what it is that you're building and with what you're building. When you're a solopreneur, these meta 4 are important. And yesterday, I believe we were talking about teams and about the team system. So if you don't have a team, obviously skip that. This one you can't skip. Today we're going to be talking about the Financial Choreography Systems and a system that you should have in place or immediately implement and put into place. And so we're going to talk about that today. I'm going to move my face over here to the side. This is the Meta 4 system framework. You can see the M is for meta, and that triangle is part of the 4 that you see there. That's the 4, and the triangle is the symbol for change. It's delta, change. And so we want to dig in today to the financial systems that we could potentially build. Now, here's the thing. There are so many, and I want to give my little bit of a disclaimer first. I am not a CPA. I am not a tax accountant. I am not an accountant by any means, but I have started so many businesses and helped run so many businesses that along the way, you start to learn the things that are necessary for you to have in place in your systems. You also learn to get those people on board. You need a great bookkeeper. You need a great tax accountant. You need a good CPA, and all of those change, what you need in place depending on how large you get and how large your team gets. If you have a team of 150 people, you probably need a CFO. And that's just something that comes along with it, because you need somebody that really understands the entirety of the finances and the financial system. Now, that CFO, if you're in a larger state of your existence right now, should be reporting to a CEO who also checks and double checks and helps to make the decisions on the direction that you're going. And that's important. Now, if you're still wearing all the hats, if you're still wearing the whole C-suite hat, that's okay. And I am actually speaking to you specifically because it's so easy to not have some of these systems in place. Now, obviously, we're not going to talk about every system you need because that would be impossible. And and not very wise. But we're going to talk about one teeny little system you can have in place. And I don't care whether you're a CEO of 200 people or whether you're the founder and owner of 50, or whether you are bootstrapping still, you're the back end of your bootstrapping phase and you're earning some money, but you only have a small team. And that's okay too, right? And I have been in all of those scenarios. Right. And I have experienced it from all of those scenarios, from sitting down and having to work through things with our CFO to having to sit down and figure it all out myself. And so I don't want you to feel bad about where you're at. And I say that specifically because I've been in all those spaces. And sometimes you feel like, gosh, I feel like I should know this, or I didn't go to school to get an MBA. I'm a master and an expert at the thing I do, but I'm trying to run this business and figure out what the frick is going on. And so I want to start off, before I share with you this system that I want you to implement right away if you don't already have it. And if you have it, cool. I want to know that you have it already. That's awesome. And I'll share that with you in just a second. But I want to share with you this quick little story. I was looking to invest in a company a while back. And this was a really cool company. They had some really great education. They were growing fast, but they were outgrowing their own britches, so to speak. And so they were looking to sell. They were looking to move on and do some other things and really gain back their life, because their whole life had been given to the business now, and they had built it up to the point where it was sellable. At least they thought it was. And so we went through and started doing the process of taking a look at the business and understanding where it was at and what it was that they had that they wanted to sell, why it was they thought it should be sold at the valuation that they gave it, that they were actually telling the world, hey, we want to sell it for this much. Okay, cool. So we started looking at it. It looked interesting, looked like it would fit in my portfolio, looked like it was something we wanted. So we went through, did some basic evaluation and determined, yeah, we're interested. So let's put out a nice letter of intent. We did that. They said, okay, yeah, that looks good. And we said, okay, great. So we signed the letter of intent, which basically means that we were intending to go forward. They were going to, because we had signed this letter of intent, they were going to take it off the market and give us first dibs at this point. However, in the letter of intent, it says that we get to do our due diligence. And so we began doing our due diligence. And that means that we get to look through the finances. We get to look through the books. We get to look through all of the things that were going on. We got to check out their assets and make sure that they were what they said they were. We got to look at their subscriber count, their MRR. We got to look at their P&L. Now, if you don't know what a P&L is a profit and loss. And so we started to ask for, we kind of went through the checkpoints, and it was like, okay, now we've kind of formed this relationship together. You know, we're serious. We know you're serious. It's time for you to hand over the P&L. And they said to us, and I joke you not, they said to us, what's a P&L? And I mean, we're talking about a business that was making, close to 700,000-800,000 a year. And they said, what's a P&L? And we went, what do you mean? What's a P&L? You should know what your profit and loss is, and you should have a profit and loss statement. They said, oh, give us some time. So then we said, okay, it seems a little strange. And they ultimately sent us a P&L, and it was a mess. It was not a well-formed, well-documented P&L. There were lots of reasons to suspect that maybe this was the first time they had put together a P&L. So as we go through it, we searched and searched and searched, and we had to actually go, hey, you know what? This isn't in your P&L. Where is this? Oh, you want that in there? Yes. Yes, we do. So that brings on the story. Ultimately, we found some things that made it so that we could not invest in that company, to their surprise. And they were surprised they should have a P&L. If you're going to sell your company, you better have a well-organized P&L. I mean, I'm just going to go out there and say it. You need to have a well-organized P&L, or you're going to get less for your company. And so if that's the case, and that's just where you're at, and you just need to get it off your hands, just realize you're going to get less for your company if you don't have a well-organized P&L. Now, that being said, that brings on what we're gonna dig into today, which is a little quick system that you can implement right away and start to get organized. Because whether you plan on selling your company or not, you should always plan on selling your company. And that's just it's a weird way of saying it, right? But if you plan on keeping it forever, you should plan on selling it in terms of practice, right? Get it prepped so that it could be sold, even if you intend to keep it. And I've seen some really incredible entrepreneurs that they were just bound and determined. They wanted to sell a company. So they went through, they did all the work, and then they sold it. And then they came back and went, why did I do that? It was all prepped and ready to go, and it would have just kept being a moneymaker for the rest of my life. But I was so intent on selling, getting a sale under my belt. So plan and prep to sell, even if you plan to keep it. Okay, so that's the first thing. And what we're going to do is we are going to jump in now to our board, to the Business Choreography Systems board, and we're going to just jump in here. As you can see up across the top on the past lives, we've gone through and built some basic systems in the E7S from the E7S framework. Yesterday, we talked about some team choreography systems, a system in the team choreography portion of the M4S framework. And so today we're going to dig in and talk a little bit about a simple thing you can do for a financial system. Now, again, I'm not trying to make this comprehensive by any means, right? That's why you have some really great tax professionals. You have some really great bookkeepers. You have some really on and on, right? But that doesn't mean you are exempt from understanding your finances and putting in some systems and practices that can help you to start building towards the future. So what we're going to talk about here is we're going to call this your weekly RRR system. And your RRR stands for report, review, and revise. Report, review, and revise. And the number of businesses that I've had to teach this to and tell them, hey, you need to get your reports, you need to review them, and you need to revise them, and you need to do it weekly. And maybe more than weekly, depending on how fast your business is growing and what's going on, right? But what a lot of entrepreneurs do is they wait till the end of the month and they're like scrambling, trying to dig everything up, or they wait till the end of a quarter and they're like trying to figure it all out. And then it's like massive stress and chaos and oh my gosh, it's overwhelming. Then you have to figure out maybe your quarterly taxes and this and that. I mean, it's just not worth it. It's just not worth it. And I promise you the level of underlying stress is way, way greater than if you just set aside a time on a weekly basis to do this. So what are we going to do? We've got report, review, revise. As far as reports go, we want to implement a financial software such as QuickBooks or Xero, and there's a lot of them out there. So if you have one implemented, cool. You want to have some type of financial software. There was probably a point in time in our existence that really you didn't need a software to do it, but the softwares are so advanced and they're so reasonable in terms of cost that it just doesn't make sense anymore not to have one, right? QuickBooks, I'm not a huge fan. I use QuickBooks for many, many years, and they're good, and many of the top financial tax accountants and CPAs really are familiar with QuickBooks and they use it. I don't know if I can't speak for them to say if they like it or not like it, but many big corporations use QuickBooks, and there are a lot of people implementing and taking on Xero because it's a little bit more friendly. And then there are a whole host of other financial softwares in the world that you can start to use. So if you're like, I found one, this is the one I like to use, awesome. There is one requirement. And that is that it can actually take a look at your overall whole of your finances, your books, your customers, and actually create a financial report for you. Now, there's two financial reports you should ultimately get used to. One of them is going to be your profit and loss. The other is a balance sheet. The balance sheet is something that we're not going to talk about right now, but I do suggest that that is one of the things that you put on the list of things you understand. Now, for some companies, a balance sheet is super easy and almost not important. For some companies that take out loans and financing, your balance sheet is super important because you can find things. Like for me as an investor, I can go to your balance sheet and find things that you didn't tell me about on your P&L, and that maybe you innocently didn't tell me about on your P&L. But things that aren't necessarily going to show up on your P&L will show up on your balance sheet. Okay. And so right now, what I'm suggesting with your report and your review is run your profit and loss once a week. Run your profit and loss and learn how to read a profit and loss statement. You've got to learn to understand it. Profit and loss is just like it sounds. Where are your profits coming from? That's your income. And what are your losses? That's your expenses. Where's the money going? Where did it come from? And as you start to look at a profit and loss sheet, you could also, in tandem, depending on your size and who you're at, whether you have an accountant or whether you're doing the CFO work, you might have your own spreadsheet that you put together based on your P&L, and you start to look at it and you go, okay, let me start to take that data in. Let me look at this. And that's why a good financial software is super valuable, right? But let me look at how my income was and looks for the quarter, for the last 3 months. And then the more you start watching and the more you start keeping it, the more you're going to start to understand what's happening. Where's your revenue coming from? What things are coming in? Is it more cash coming in, or is it more recurring coming in? Right? Those types of things are massively important. And then you're going to learn what your expenses are. You'd be surprised how many times we find expenses, and especially from a investment perspective, when I look at a P&L, it's amazing how many times I look at expenses and I immediately get rid of them. I look at them, I'm going, okay, they're spending money on that, I could get rid of it. Okay, they're spending money on that, I could get rid of it. And that's important for me as an investor, because I might look at that and I might say, well, okay, I understand that you're spending money on that, but you don't need to be spending money on that. There are so many times when I look at a business and look at their P&L and their expenses specifically, and I find 4, 5, 6, 10 pieces of software that they're running in chaos. And I'm like, what in the world are they doing? Right? Look, you add up all those expenses, they're spending like $1,500 a month on software, or even like, even $1,000 a month on software, or whatever it is that they're spending on software. And I'm just like, why are you doing that? Like, what, to what extent is that helping you? And so then I just go consolidate into a software that I like, right? That does everything, because it's silly these days not to have one single software, one login, one home for everything. For me, that's our software. We use Choreo Suite, and it does that. It's not a financial software. You still need that, right? But I see it all the time, right? And so when I'm looking at it from an investment perspective, I look at that and go, I can get rid of all those expenses. I can consolidate down, and that increases my bottom line, which means that my profit is going up. Right. So you can look at that. You can look at different things. You can renegotiate leases. You can renegotiate all sorts of things that are happening, suppliers, if that's part of your business and what you're doing. And so understanding and learning to read your P&L, and even just paying attention to it, will make a huge difference. Lastly, on this list, we have revise, right? And that's where you start to make adjustments to your spending. Now, if you have a CFO, then obviously you can start to converse back and forth, and they'll start to make suggestions on what the revisions are. But if you are wearing that hat, you have to be able to get familiar enough with your P&L to start to make adjustments to your spending. You can start to look at the things that you have on your expense list and go, well, do I need that? Or can I lower that? Or can I consolidate all those pieces of software into one piece of software? Can I go get Michael's Choreo suite that he's talking about and save all sorts of money on my tech stack? And if you can, then why wouldn't you, if it makes things better and it systematically makes things better? So here's the thing: report, review, revise. This is huge, right? Just get the report, get the balance sheet report, learn how to read it. Get the P&L, learn how to read it. Get the quarterly comparison, right? And learn how to read it, learn how to utilize it. And then understand that if you put that into your mix on a regular weekly basis, now all of a sudden things are going to change. They're going to start to grow. They're going to start to get better. And the reason is because what you measure grows. That's it. And it's really, really cool how it happens. Another business that I invested in for the first, I'd say, 6 months of working with them after we invested. I think they thought we were going to dig in and do some other things because they understand our skill set. And all I did was work on their financial systems and getting their reporting down and clear, and getting some reports that were easily readable because their financial systems were a mess. How they reported, they couldn't answer basic questions. Well, where's the revenue coming? I don't know. Well, what's costing you the most from your retail side? I don't know. Well, how much are we putting out for our staff, and I don't know. Okay, so we had all these I don't knows, and we had a P&L that was in shambles. So first 6 months, we just worked on getting that P&L in order, getting our expenses in order, getting our income in order, and being able to track it. And I know that sounds like, well, duh, Michael, of course I should do that. But you'd be surprised how many times, and you might be one of them, but how many times people don't know where their money's coming from, where their income, their actual revenue is coming from. If you have multiple sources of revenue coming into your business, it's so easy to just group them all into one and fly by the seat of your pants. But I don't suggest that. I don't suggest that. So down here at the bottom, you might have read this already. I have written here: set up a time weekly at a minimum to go over your P&L, your books, your bank accounts, and any of your financial plans. Because if you start to measure it, if you start to pay attention to it, it will grow. It will start to get better. It will start to improve, literally just by paying attention to it. Notice I say paying attention, right? You're paying it forward. You're putting your energy and your time and your focus into it. And as you do that, that's fuel. That energy and that focus is fuel for your business. And you will see things naturally start to happen. Now, it's probably going to be from a bunch of little things that happen. Well, look at that. I'm spending too much here. Oh, look at that. I thought when did that contract change? I thought we were getting this much in, and we're really getting this much in. And, it's crazy how valuable this is. But I was going through some recurring revenue income that I get, and I found that one of our clients had just stopped paying. I was like, wait, what do you mean? And so then, of course, I had to go down that rabbit hole. But luckily, I have my time set aside. And I do that. Went down the rabbit hole. Turns out they had actually had a failed payment, and it had declined. And I thought it was us. The way it looked in the books, it looked like we had accidentally stopped charging them. Luckily, it was just that they had stopped paying, right? That their payment had failed. So then I could put them into the right system. But what I did find was that there was a system not firing to go and collect that failed payment. And so I had to turn that back on. For whatever reason, systems, they break over time for whatever reason. Maybe not even any reason of yours or any fault of yourself. It's just something that happens, and that's why we have constant checks and balances. Now you notice here I put in all caps down at the bottom. This time should be protected at all costs. This is a big deal. I I have set this systematic process up with a bunch of people in my time and on my journey. And it's amazing to me how many of them turn it off or just stop. It's not protected time. It's so important. It's so valuable. This time should be protected at all costs, meaning you do it and you put it in your schedule and it is a non-negotiable. And if there is something that has to override that time for some reason, your wife's having a baby and it happened to be right during that time, then you have a fallback time where you go, okay, if I can't do this during this time block that I've allocated for this, then I will 100% put it back in, and it doesn't get wiped clean and I just skip it. It has to go back in somewhere. And your time to deal with your finances, regardless of what phase you're in, whether it's meet with your CFO, whether it's meet with your bookkeeper, whether it's do your books, because you're the one responsible, doesn't matter what it is, or which stage you're in. What matters is that you have it set aside and that you do it and that you protect that time at all costs. And that's huge. Just that one little mini system, right? The trigger is Friday, right? Trigger is Friday. And for me, Friday is my financials day. I've tried it on other days, but Friday is my financials day. That is the number one thing on Friday, to go through financials. And if it takes me the whole day, cool, but I have a certain amount of time set aside. And then if I need more time, I take it. But Friday is the day for me. And that's the day it works out great for me. But other people are like, love Mondays. Other people are like, it has to be Wednesday. Some people are like, it's Saturday. Whatever it is. But whenever it is, you should put it in a time and a place when it's least likely to get upended. It's least likely to get overrun by something else in your world, right? So this is not hard, and I want to really encourage you guys to put this in right away. If you don't have this in your world, if this hasn't been something that you've already put together and established, if one thing I said in here isn't in your weekly routine, then you should put it in. Don't wait. Don't give me any excuses. Don't tell me why you can't do it, because there's no good reason. Don't tell me, well, I'm not the accountant. I'm not the... Doesn't matter. Doesn't matter. If you're currently wearing the CEO hat and you don't have a C-suite, then you are the CEO and the CFO. That's Chief Operating Officer, or sorry, Chief Executive Officer and Chief Financial Officer. And it doesn't matter. If you're wearing those hats, then you need to make sure this time is put in. And I was the operations officer for this company, and I learned this from the CEO that came in and was running this company. And we had many conversations, because I was the operations officer. And so we had many conversations about the CEO position. And he says, he taught me, hey, look, you don't realize how much of the CFO stuff I do as the CEO. And it's because it's his responsibility to make the decisions, and that means he has to be super clear. That CEO position has to be super clear on what's going on from the CFO, and that means the CFO has to have great data, right? All right, so this is a basic system, a basic idea. We're going to call it our weekly RRR system, right? Report, review, revise. Report, review, revise once a week. I'd like you to put it in. I'd like you to get it installed. And I don't care what size business you are. If you're bootstrapping, this still is for you, right? But if you've got a 200 employee business, this is still for you. This is still for you because it's so easy. And I've watched it happen with some founders, right? There were some founders and they just let it go because they had a CFO and they had a CEO running the company. So why do they need to look at it? The other people were going to do the job. No, you need to have your time when you do it, right? It doesn't matter if you have those, the C-suite in play. So we're going to take this right here, just like I like to do, because as you probably have learned, like to have things pretty organized. So we're just going to take that like that. And we're going to, let's see where that ends there. We're going to put that just above and back to the back, forward just a little bit. All right. Let's group that up. We're going to shrink that up over here. We're going to put that next to our other meta system. Guys, I'm so thankful that you guys are here joining me today. And for those of you that are watching this on the replay, let me know. Have you done it? Even if you're watching live. Have you done this yet? Do you have a time that you've set aside? Do you understand your P&L? Did you know what a P&L was before this? I know it's kind of hard to talk about that. You don't necessarily have to put that in public, right? But, take a good look at yourself. Take a look at your business and what you've been doing. And if you're not looking at your P&L on a regular basis, just start looking. If you're like, Michael, I don't know what to do with it once I get it, once I have it to look at, I don't know what to do with it. It's all good. It's all good. Just start looking at it. The more you start looking at it, the more you start paying attention to it, the more you'll start figuring it out. Now, there's lots of education, lots of stuff on YouTube, how to read a P&L. Just go look that up. That's not our game here. We're talking about the system of executing it, the system of putting it in play. And I am not going to pretend to be a CPA, right? Because there's some really great CPAs and there's some really great people at the financing side. But go look up those videos, how to, the basics of reading a P&L, and start there. Because you know what? It's easy enough. But I'm talking to you more about getting the system in play. Get the system scheduled and blocked out and start to go from there. All right, guys. This has been fun. As usual, I want you to keep choreographing your systems. I want you to keep choreographing your business. And as you do, it'll get easier and easier. Guys, I hope you're enjoying this Backstage Choreography live streaming session. I like it. I'm having a great time getting on, and it's going to a lot of different platforms and a lot of different places. But if you haven't joined the Systems for Choreography or Systems for Experts community, it's free. You should come join us. Systemsforexperts.com. It's free. We give a bunch of free, cool stuff, some free courses, digital business fundamentals, MVC course, just a ton of stuff for you, a lot of resources for you to improve your business. And that's all free. So come and join us. Come and get that stuff. And of course, we'll see you on the inside. Until next time, keep choreographing your business. We'll see you on the other side.